Good morning, hello and welcome to a fresh new edition of Bazaar Morning Call. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, as always, my colleagues Sonia and Nigel. Good morning, guys.
Morning.
Hi, morning. Morning, Nigel. It looks like it's going to be a tough start, right? I mean, it has been for the last many weeks, but given the global setup, given what's happened with the FIQs, the selling, etc., it doesn't look that great.
I mean, it looks actually quite bad, right?
Yeah.
Because we were talking about a Fed pivot.
Yeah.
There is a pivot, but it's not to being dovish. It's perhaps being too hawkish, right? I mean, and I think that is the worrisome thing for markets, really. Let's just quickly run you through what matters, right? So it's risk-off environment globally, no doubt about it. We saw sharp cuts on Friday. The Nasdaq was down 1.7%. The S&P lost a little less than that. Well, this is the lesser of the worry, the cut in the equity market. Look at what happened to two other things. One is the yield, the 10-year yield, which is now nearly at 4%, 3.94 or so. And it looks like it perhaps will push higher the way it's closed. We got the weekly closes that we have. The other thing is the dollar. The dollar index now saw a large move on Friday, about 0.6, 0.65%, and it's past the 105 level. You know, 2 weeks back, we were looking at sub 104 kind of levels, and we are now past 105 levels. And that is what data has really done. Talking about data, we got more data on Friday. The US PCE number, which added fuel to the hawkish Fed fire. Numbers were big beat as compared to expectations. The inflation component was also pretty sort of hawkish, at least will be perceived to be hawkish. And speakers who were part of the Fed speakers were quick to respond. I mean, I saw three sort of voting members of the FOMC come out and say that inflation remains at critically high levels and there is a lot more heavy lifting to do before we can say that the job is done. And I think this is the worry which people are watching very closely. Now, two other things, right? Amidst all of this started, by the way, all of this kind of re-pivot, as I said, to being more hawkish and not dovish, started with the jobs data. But since the jobs data, we have the CPI, the PPI, the PCE, the PMI numbers, and a few other things. And all of this has resulted to the market pricing of the Fed peak rate now being at 5.42%. You know, this is about 50 basis points. This has moved up 50 basis points, you know, in the last a little over the last 1 month or so. So this is important. Not just the peak rate has gone up, which is basically how high the Fed will go and then stop, but market expectations of the rate cuts have also gone down. So pre the Friday data, the latest data, markets were expecting that the Fed will cut rates by 34 basis points in the second half, late in 2023. That has now dropped from 34 to 25 basis points. So the high is becoming higher and the cuts are becoming shallower. That's the market impact. Now, where does this leave us? I mean, the setup is clearly negative, right? I mean, you need the dollar lower for emerging markets to do well, not higher. You got yields, I mean, market interest rates in the US, not at 5%, you need it lower. And that is an adversarial global situation that we find ourselves. So the Nifty, to start with, is now, I think, sort of by and large approaching the budget day low. I guess it's a matter of time. 17,465 is where we left off, a 0.25% lower. The budget day low is 17,353. I mean, it doesn't necessarily have to be a sharp one-way kind of a cut, even though the open perhaps will suggest that this morning. But inevitably, I think that becomes the kind of near-term pivot to watch out for. Who would have thought? We crossed the upper end of the budget day range, and now we are retesting the lower end of that day. Below the 17,353 level, the 20-month moving average for the Nifty comes into play, which is not very far away from the budget day low, but that comes in at 17,280. I don't want to put sort of lower levels from here. We'll see how it goes. But 17,280 is the long-term moving average for the Nifty, which becomes important. We are below, of course, the near-term daily, weekly moving average. We're below the 20 weekly moving averages as well. So the 20-month becomes important. In a similar way, for the Bank Nifty, I mean, I think a retest of the 39,600 level becomes, almost inevitable, right? We're 300 points away from there. Below that, the 20-month for the Bank Nifty is a little distance away. That stands at 37,901. I'm not saying we go straight away, but I think important to have some of these numbers in mind, that there is a big gap between where the 39,600 level is, which is the near-term low. I mean, there is the Jan 30th low as well for the Bank Nifty. But after that, you straight are looking at about 2,000 points on the downside in terms of a big pivot or a big support level, which perhaps starts to come in. As I said, the problem is not so much local. The problem, once again, is global, like it was in 2022, like it was in the second half of 2021 as well. The SGX is indicating a flat start. I reckon that perhaps it'll be a little deeper than what the SGX indicates. Sonia, hi.
Absolutely. Hi, morning. I think that's the big question, right? The sell-on rally trade, which worked very well all of last fortnight, is something that could continue this week as well. So that's the big question. This market continues to be a sell-on rally. The global handover has been on the weaker side. In fact, I think for the entire week, if you map it, it's been the fourth straight losing week for the US markets, down about 3% last week. And once again, it's all the Fedish, sort of hawkish Fed speak that's really impacting the markets. Prashant was talking about what the prognosis is. Goldman Sachs put out a report where they are predicting 3 more Fed rate hikes over the next 1 year and no cuts at all. So, earlier the narrative was that there could be a cut sometime in the 2023, but that is completely ruled out now after the data and the hawkish tone from the Fed. Now, Brent crude is also back above $83 a barrel, so keep that in mind. The FI selling continues. So FIs have sold in the last 3 trading sessions alone about 3,460 odd crores. And on Friday, there was big selling of almost 1,500 crores. The Nifty lost about 2.5% last week. It's down for 6 straight days. So even if there is a mild pullback, at some point a pullback will come. Even if it does come, the narrative is that it could get sold into. So some caution perhaps is needed even in this week. In that context, a lot of global data to watch out for through the course of the next few days. You have the US durable goods orders, you have the ISM manufacturing survey and the consumer confidence index. All of these data points will give an indication of whether, there's more hawkishness to come from the Fed or not. But give and take everything, it's a bearish view on the market. And even if there are pullbacks, they could be A, unconvincing, and B, they could get sold into as well.
Well, that's right. Sonia, besides the equity markets, I'm looking at the other cues that came in from the global markets, and the bond yields, well, they moved up. The dollar index is higher than what we left off on Friday. And the other factor is that Brent crude prices as well have perked up a little bit because of fears that supply restrictions could be again coming to fore, given that Russia is talking about some bit of supply cut. So that's a bit of an issue. So all those 3 data points, they're negative for equities. How's trade set up this morning? Well, the bulls will hope to defend the 200 DMA as well as the budget lows. They're pretty much very close to each other, both for the Nifty and the Nifty Bank, and we'll get to that in just a bit. At higher levels, the Nifty is prone to selling. We'll get to that level as well. But what's encouraging for me is last week there were first signs that maybe the broader markets could hold their ground. There was a relative outperformance that came in from the mid-cap and the small-cap indices, and at least they outperformed what the headline indices did. If you'd like to see more of the same, then even if the index doesn't do much or sees a mild bit of a downtick, if the broader markets can outperform, portfolios will start feeling much better. What did the FIs do in the FNO market? Well, they're net short on the index and they unwound closer on 2,500 long contracts. So the short position goes up to around 82% odd. On the option side, you're not getting any big direction. They bought more calls than puts. The problem is they're writing calls very, very aggressively. 17,600 call, 17,700 call. Between them, they added close to around 80 lakh shares odd, telling you that, in fact, they believe that higher levels are not coming. And going by that 17,600 odd call, you add 50 rupees out there, they are working. The bears believe the 17,650 odd level is not going to get broken on the upside. So they're looking to defend that level. And if you want to get a sense in terms of the bearish sentiment, the highest open interest on the call side is at around 17,600 call. That's close to around a crore shares out there. On the downside, though, the put, well, that's only around 50 lakh shares odd. So those writers, they are expecting the 17,600 odd level not to get broken, 17,650 or thereabouts. So that's important as well. Let's get straight to the levels then. 17,650 on the upside will be met with some supply. On the Nifty Bank, 40,500 odd, and the budget day lows. For the Nifty Bank, the 200 DMA is a little lower than that, 200 points lower. But otherwise, the budget lows is going to be very, very important. We're likely to start off a little bit weakish, but the first breach of those levels will be met with some buying. Sustainability is going to be very, very important. So keep that in mind.
I mean, the problem, Nigel, is that it's not as if here earnings are looking super strong or anything, right? I mean, that's the other thing. That's the other leg. The local leg is also not, a lot of people have asked me whether things are looking very bearish. I would say it's not looking very bearish, locally speaking. I mean, it's still more of a global kind of a problem. But, you're not getting that help, that trigger, that spark from local earnings as well, as we've been pointing out as well.
And just to give you an example on that, there's a report suggesting that Bajaj Auto is going to be cutting its production production by 25% because of the weakness that we've seen in the export markets, especially with Nigeria and the devaluation of the currency. So I take your point. I mean, demand continues to be a concern, whether global or local, right? And you're seeing large companies cut production. I guess that would impact as well.
Yeah, on the global factor, the metal index gave you a perfect view on Friday. You know, there was no company-specific news that came in, but the metal index was down, I think, 2.5–3% odd. And for this month, it's down 15%. So that's telling you the fear of the global slowdown. And on the domestic part, Prashant, you have said this numerous times. The EPS may not come about that we're working with. So that's one risk. And the other problem is, will we have a favorable monsoon? You know, we have had 4 straight good ones. We have never had 5. So hopefully we break that jinx.
Yeah.
But that's the other bit of a niggling worry in the next few months.
Yeah, 3 La Ninas and now perhaps a El Nino, right? As we were talking about. No, absolutely. But you know, that's the market for you, right? I mean, never a straight line. It's always 2 up, 2 down. But you know, gradually but surely you do move higher. So while we talk about the day-to-day, I mean, if you are, of course, in the market looking at portfolio stocks, own good quality stocks, I mean, I think you should stay focused on the long run. I just wanted to say that here. Amidst all of this gloom and doom, which of course also is part of life. Well, before we start, let me quickly tell you what is lined up here in the first half hour of the show. We will get you updates from markets across the globe. Ed Yardini, Yardini Research, will join us to discuss the global trade setup. Later, our research team will bring you CNBC-TV18's list of top 10 stocks for the day. At around 8:30, we will do a fundamental stock check on markets with Prakash Diwan, who will be with us on the program.
All right, so let's begin the show then on the equity side.